Hi, I'm Ben Peel, UK Managing Director at Portfolio Metrics, and I'm here with Nick Spicer, our UK Head of Investments. So Nick, in what's been a fairly unusual year, to put it mildly, what happened in Q3 in particular?
Hi, Ben. Yeah, the third quarter saw further strong gains in most risk assets. It was particularly good quarter for the large internet giants, but also for growth companies in general. The UK companies, on the other hand, suffered overall as Brexit worries resurfaced and a second wave of COVID-19 emerged, alongside personal restrictions to try and contain that spread.
Okay, and in terms of defensive assets, it wasn't a bad quarter for them either, was it?
No, high quality bonds also rose, albeit modestly, and gold did particularly well. It was up almost 6% in dollar terms.
And what about in terms of currencies? How do those do?
The pound was pretty strong actually over the quarter. So flat against the euro, but was up 4.2% against the dollar and about 1.8% against the yen.
Right, and for our advisor partners who are watching today, can you give them some more detail on how each region and how each asset class in particular fared during the quarter?
Developed market equities, as measured by the MSCI World, rose just over 3% over the quarter, which means they're up 4.2% year to date in sterling terms. The FTSE 100 is down 4% over the quarter, which means it's still down 20.2% year to date. The MSCI Emerging Markets rose 4.7% over the quarter, which means it's down 1.3% year to date in sterling terms. And your high quality bonds, as measured by the Bloomberg Barclays Global Aggregate, were up 0.6% over the quarter, which means they're up 4.2% year to date. Riskier bonds, high yield bonds, were up 3.2% over the quarter, which means they're actually down 2.2% year to date. Moving on to equity investment styles, if you remember, global equities rose 3.2% over the quarter, and growth, expensive equities, they actually rose 6.8% over the quarter, so 3% more than the broader index. Value, cheap equities, they actually fell 0.7% over the quarter, so 4% less than the broad index. And your smaller companies rose 2.7% over the quarter, so 0.5% less than the broader index.
Informative to see that actually some of these indexes are now back in positive territory for the year. Now, looking a little closer to home, how did the Portfolio Metrics portfolios perform during this period?
Yeah, so Select One, our lowest risk portfolio, was up 1.1% over the quarter, net of all investment charges. Select 4, our mid-risk portfolio, was up 1.4% net of all investment fees over the quarter. And Select 7, our highest risk portfolio, was up 0.7% over the quarter. It's also worth noting that our Sustainable World portfolios did particularly well, given their quality growth focus. So Sustainable World Profile 4, our mid-risk profile there, was up 3.1% over the quarter. Also, if you're interested in ESG and responsible investing, please ask us for a copy of our white paper on the topic.
Okay, I would certainly say that ESG white paper has been very well received, lots of downloads and lots of interest in that theme, so you can expect to hear more from us on that topic. So beyond that, Nick, as we head into the fourth quarter, what are the key trends you're watching out for in markets and asset classes?
Yeah, Ben, so coronavirus is, alas, still with us, and it does remain the key risk going forwards. Governments are struggling to strike the right balance. Too many restrictions and you choke off economic growth. Too little and you see a resurgence of the virus's spread. A winter second wave would obviously be extremely negative for markets in general, but success in controlling the virus, perhaps through better testing or even better by a vaccine, would obviously see a lot of upside.
Understood. But sadly, Corona is not the only thing on the horizon to worry about. We've also got the US election coming up early in November.
Yeah, so on November the 3rd, and Biden's currently leading in the polls. But the key risk here is actually a contested election, with Trump having refused to commit to honor results that go against him. So I think in the US, further fiscal stimulus is quite likely, be very positive for markets, and would be likely to sort of come on board quickly after the election if we get a clear result. But if we get a contested election, that could actually be delayed somewhat, which would be negative for markets. And then, of course, if you had a contested election, that would just raise the political uncertainty quite a lot.
Okay, so still a little bit of uncertainty about the US, and closer to home in the UK, it's hard to believe that we're still talking about Brexit, but we are. What are your thoughts there?
Yeah, Brexit, the continuation. So it's not clear whether we'll get a UK-EU trade deal before the transition period ends at the end of the year. We're obviously hoping for a deal. This would clearly benefit both the UK and the EU, but politics could get in the way. I think the only positive here is that at least we should finally know one way or the other before the end of the year.
So as per usual, still a few risks to be aware of on the horizon. How are you and the rest of the investment team at Portfolio Metrics positioning portfolios to adapt for those risks, Nick?
Yeah, so Ben, we've made some changes to portfolios recently, and most of these were fairly modest changes to at least the asset allocation. There were a few fund switches as well, but I think of those, the most exciting was really the addition of a Chinese A-share fund from Allianz. So we think domestic Chinese companies have a huge amount of potential given the growth of the Chinese middle class. And we think that this fund is a great way to actually access that opportunity. I think if you'd like more information on that, please ask a member of the team and we can certainly send you some up-to-date thinking on all of these changes.
Very interesting. For those of you who don't know, my former life, I spent a lot of time in China looking at Chinese domestic companies. I would fully agree with Nick in terms of the growth of the middle class as one of the key themes for the years to come. So that aside, Nick, any final thoughts on the quarter for our viewers?
Yeah, I think, just to sum up, while there's a lot of uncertainty in markets and coronavirus is likely to remain a risk for quite a while yet, I think the key benefit is that, some of the uncertainty, certainly in the form of US elections and Brexit, should be over by the end of the year and should remove some uncertainty from markets. I think, in general, we are just continuing to maintain diversification in portfolios to try and deal with these risks. So across country, asset class, fund, currency, just to help mitigate those risks. But I think also, that diversification also helps us to tap into those opportunities that are still available. And on the whole, we think portfolios are very well positioned going forwards.
Great. Well, many thanks, Nick, as always, for your views and insights. Thank you to all of you for listening. If you've got any questions for the next one of these that you'd like answered, then please drop Nick or I an email. We'd be happy to take those. And apart from that, in these strange and unusual times, we hope you stay safe. Thank you for your support as always. And if there's anything we can do to help, then please let us know. Thank you.